It's time for the Jupiter Joe Money Show. I'm Jenny Thomas, and we have Jupiter Joe, our host of the Jupiter Joe Money Show. And today's show is called Zero Balance, Still Get Paid.
Yeah, it's interesting, isn't it?
So we had a client call, and you had spoken to her about her annuity, and she was wondering what happens when the balance goes to zero.
Yeah, so her husband decided that he's going to retire. And when he retires, she's retiring. And so she called up the company without talking to me first. And she said, hey, Joe, I just got off the phone with XYZ company. And they told me that I'm going to get this $25,000 or $30,000 a year for the rest of my life. I go, yeah. She goes, is that true? I go, yeah. And then she goes, I said, not only that, it's going to go to your husband too, if you pass away, either way. She goes, you're kidding me. I said, no. And then she goes, what happens when I run out of money? I said, if you run out of money and you have a zero balance, you still get paid. She goes, that's impossible. I said, no, it's not. It's an annuity. I said, lifetime income annuity with a guaranteed income rider, which guarantees you income for the rest of your life and your husband's life if you do a joint life payout. And that's what we specialize in, showing people, even if you have a zero balance in your account, you still get paid.
Right. So if you think about it, if you have a checking account or a savings account and you have $0 in your account,
what happens?
You don't have any money.
You're done.
Run out of money.
You're done. So with an annuity, if you have a zero balance, which I have never seen a zero balance, by the way, ever. And I've been doing this for 25 years, doing these type of income annuities and indexed annuities in South Florida. I've never, ever seen a zero balance. But let's say there was a zero balance. The company is contractually obligated. That means in the annuity contract, it says if you run out of money, they continue to pay you. It's a contractual obligation. Legal contractual means it's legal. You know, it's legal crap, right? But here's the deal. If you have a mutual fund, a stock, a 401k, stocks, bonds, mutual funds, any kind of a security, and the balance is zero, you stop getting paid. In fact, the account is defunct, gone out of, whatever it is, whatever term you want to use, it's gone. The money's gone. With an annuity, if you have a zero balance, they still have to pay you with this specific type of annuity, which is an income rider annuity. It's an income annuity.
Right. So when you compare it to somebody who has a 401k and they're turning that lump sum of money into an income annuity, that money will be guaranteed for life.
Forever. Forever seems like a hard terminology for some people to understand. Forever means, in fact, when we run proposals, it shows 30 years, but on the contract and in our proposal, it will say lifetime payout, which means lifetime means forever, as long as you're alive. And what makes it further good is that not only does it pay you for life, let's say the husband or wife, whoever's name it's in, but if we do a joint life payout, two people, then it goes to that other person for the rest of their life. And the company's contractually obligated to pay you and your spouse money forever, even if there's a zero balance. Now, compare that to anything else there isn't. Now, only a pension plan can do that for you, period.
And you have to make sure that you select the correct choice.
Yeah, and we talk about that, and we talk about when you can turn it on, when when the best time to turn it on. I had a gentleman on the phone this morning who had purchased it a few years ago, and he said, I don't need this money for 5 more years. We talked about 7 years was his timeline. He wants to retire when he's 73 or 74, whatever the age is. Some people do it younger. I know you have an example there of a 65-year-old turning it on in 2 years. Let's give him an example so we can talk about numbers, because this is really important. I mean, this specific contract gives you a big bonus of 25% bonus. People say, how can they do that? Well, they're giving you future dollars that you're going to use, and you get a percentage of it, and it basically lasts you the rest of your life.
All right. So you start with $250,000, you get the 25% bonus. Your income bucket is starting day one at $312,500. Right. And then you delay starting income for 2 years, and your lifetime income payout is over $22,000.
$22,000 a year on $250. Not bad. In 2 years. Now, you can pull the trigger, I call it, pull the trigger whenever you want for income, anytime after 12 months. So you have a 12-month wait, and then you can start income. The other thing about this specific contract, and a lot of the contracts that we offer our clients with the income rider, is that it has an income doubler. Almost all the products we offer have an income doubler of some sort, where if you do get sick, it doubles your income for 5 years. Most of them do. And that's another thing clients can't believe. I had a client up in Tequesta, and her friend called me and said, hey, so-and-so's in the nursing home up there. And I said, really? And she said, yeah. She said, she's running out of money quick, Joe. She needs money. And I said, do you know she has the income doubler? She goes, what's that? And I told her, and she says, oh my God, that's going to come in so handy. And what's interesting is once we turned the income rider on, they never called me again saying they needed more money because the income doubled their income for 5 years. So if you're getting $22,000 a year, you now get $44,000 a year. I mean, the benefits of these annuities is staggering. Unfortunately, a lot of people have been told how bad they are in a general sense, not in a specific sense. Uncle Louie in Cincinnati had an annuity in the 40s and he lost all his money. Well, those days are gone and we don't have those products anymore. And who cares? Quite honestly, let me show you how this specific annuity is going to work for your specific needs, for your spouse specific needs, and how it works. A zero balance and you're still getting money is an extremely big deal. The fear of running out of money is every retiree's problem, right? Or issue, or they think about it. This now eliminates that fear. You get a zero balance, guess what? We still have to pay you. Right? Think about it. Just like Social Security, we're going to talk about that. Social Security, a pension, and an annuity with a guaranteed income rider guarantees your income for the rest of your life. For the rest of your life. Don't tell me doesn't exist because I can show you in black and white anytime you want to. Give us a call. We'll show you how it works.
If you're just tuning in, this is a Jupiter Joe Money Show. We come to you each and every week, Wednesday and Thursday at 6 p.m. and also on Saturday mornings at 7:30 a.m. You can catch us on YouTube. Go to YouTube and type in Jupiter Joe Money Show. You can see all of our past shows and see who we are, what we do. And if you'd like to book an appointment with Jupiter Joe, go to jupiterjoe.com. You can book your free appointment, get a second opinion. Call us here at the office in Jupiter, 561-743-0999.
So we recently got our books. I want to show everybody the book, Retirement Know-It-All. I wrote this book around 7-8 years ago, maybe 9 years ago. I don't even know how long it was. It tells us in here somewhere. But Retirement Know-It-All. Evan redid the book cover, my son, and the back cover, and there's some new information in it as well. Anybody that calls us or sits down with us personally will get a free copy. We will send you a PDF if you want that as well. I'm old school, so I like to have something in my hand. It's only 120 pages in here, something like that. It's 112 pages. Look, I could have made this 400 pages. Why? This stuff's complicated enough. We want to keep it simple. Anybody that wants to sit down with me gets a copy for free when they sit down with me, and they get a free 45-minute consultation. In fact, in the book it says here, free 45-minute consultation. Interesting story. My cousin's an attorney in California, and he said, hey, Joe, he got a copy of the book when I first put it out, and I've had the 45-minute consultation there with me for years. And he said, how can you do that? He said, change that to 15 minutes. He goes, you don't want to be talking to people for 45 minutes. I said, well, it's interesting. It takes 45 minutes to get to the nitty-gritty of what people want to do with their money and what their goals are, and are they leaving money to their kids, their wife, their spouse, their girlfriend, whoever it may be. So we've always kept the 45 minutes. And I think, I've had people come in my office and they ask me, do you have a timer? I'm like, no, just let's talk. I mean, I had a guy in my office one time, it was an hour and 45 minutes before we even got to the nitty gritty of what we were going to do. So get a copy of my book, Retirement Know-It-All. It's for your benefit. The one thing about this show is providing information and education. We're never here to hurt you. We're never here to sell you. We're here to provide information. If we're so lucky and you decide to give us an opportunity to earn your business, we're going to show you what we know about this stuff, period. And it's free. Right. How do I get paid? I just want to talk about it real quick. I get paid a commission from the insurance companies we represent. It comes out of their pocket, not yours. So they pay us.
And I think another important factor too is you're not tied to just one company.
Correct.
You represent all companies, and that's why it's so dependent on what the client wants and needs. Yeah,
let's explain that. So if you work with a broker-dealer advisor, a Raymond James, a Morgan Stanley, Fidelity, they can only sell the products under their umbrella, the products that their managers in their company have decided to work with, nobody else. Mm-hmm. So we can work with whoever we want because we're independent. So what that does for you as a client is it provides you with the opportunity to earn better interest rates because we have 48 pages of interest rates. And we show the clients what those interest rates are. So if you're shopping a 3-year fixed annuity, a 5-year fixed annuity, we're going to have the best rates. You want an A+ carry, you want an A++ carry. We push it in the computer and it pumps the information out. And we tell you exactly what you're going to get to the penny. If you want an income annuity, we're going to show you the 3 best highest payouts in the country. Okay. Now, not all the time does that work out. I'll be honest with you, with some of the companies. Some companies we may not want to deal with because we've had issues in the past with them. Maybe just one of them I can think of in particular, which they said they were going to do one thing and they did something else and we stopped dealing with them. And I can do that. Other brokers and advisors can't do that. We're going to do what's best for our clients. Okay, period.
And I pulled something from your book, The Retirement Know-It-All, and you had written, many advisors simply do not know or understand how to guarantee an income stream for the rest of the client's life, simply because they cannot offer products such as income life annuities because their companies or broker dealers will not let them. And that's funny.
I had no idea you were going to talk about that. I had no idea. And it's interesting because this just came up with a client 2 days ago, and particular woman on the phone said, I have Raymond James. I'm over 80 and I need income. And he said, how much do you want to withdraw per month? Instead of saying, what is it going to earn per month? Or what am I going to get for the rest of my life per month?
Right.
So different strategy. And unfortunately, they can't guarantee you income like we can, unless they do a guaranteed income annuity. Now, some of these guys do sell guaranteed income annuities like we do. I think we're better in many respects because we're going to show you the highest paying ones. It's really about who pays the most with these income annuities. I tell people all the time, let me ask you a question. If you're on a car lot, now you just recently bought a Tesla, right?
I did, yep.
Would you have rather spent more money or would you have rather got the price lower?
The price lower or a lower interest rate.
Or lower interest rate or lower payments or whatever. Well, it's the same thing with this, except it's the opposite. You want to get the highest payout. Right. You want to get the company that pays you the most, not the least.
Right.
Ratings are important and assets are important of the insurance company we represent, but generally speaking, you're going to be just as safe in a big company as a small company. Generally speaking, there are specifics in everything, and we can get into that personally when I see you.
A lot of clients also ask questions about, you know how when you pull up your I don't know, PNC Bank or whatever bank, and it says insured by FDIC.
No, Federal Deposit Insurance Corporation, right.
And they ask how the annuities.
So for years, it was taboo. We weren't allowed to talk about it. But generally speaking, here's how it works. The state of Florida regulates all the insurance companies out there that do business in Florida. They have to be an admitted company, meaning the state approves them. There is a pool of money that basically says that all these insurance companies that do business, that sell annuities, have to pull together and pay the claims of an unpaid claim. I'm generally speaking, because I'm not an expert in this area, but basically they cover up to $250,000, similar to FDIC at a bank. Right. But it's a different insurance. It's insurance for insurance. But first, you would always go through the assets of the insurance company, and that's why they have ratings. Ratings are basically claims paying ability. How do they pay their claims? You know, meaning if there's a death, if you need money or whatever it is. You know, I've been doing this a long time. I was just telling the gentleman the other day, I've been doing this for 40 some years. I've never had a company that I've ever sold that ever had any financial difficulties. You may have companies here or there that will get bought out by other companies, but that's just business. I always say to people, look at your bank. I've had one bank since I started down here, and it's changed hands, I think, 5 times. Wachovia, Wells Fargo, you know, whatever the company was. Banks change hands all the time and they go out of business all the time. And this isn't me talking. You can go to FDIC.org and pull up Florida and you can see how many banks actually folded and went under with FDIC this specific year. You know, not even last year, 2025, 26. So, you know, it's interesting.
That's what I think the difference is when you have a retirement plan, you know, it's for accumulation, but the biggest question is how much money are you going to have coming in when you're not working or when you're working part-time? Yeah.
Well, you and I have talked so many times about this to the penny thing. You know, what happened was we kind of did a show together, me and you, about 6 months ago, maybe 8 months ago, and we did the show to the penny. And you wrote the show. Yeah. And it was about Social Security to the penny. Everybody knows to the penny that walks in this office or calls me. I'll say, how much is your Social Security going to be per month? $2,742. They know to the dime how much money they're going to get per month and when it's going to start, right? And if they wait a year, how much it's going to be. Well, how would you like to do that with your money that's sitting in a 401k? Take out $300,000, give it to us, roll it over. We do a rollover. There's no tax. It's an asset-to-asset transfer, and we will tell you to the penny what you're going to get per month for the rest of your life. Oh, and guess what? If you pass away, your wife's life or your husband's life forever to the penny. So that's why we know how important this stuff is with annuities. And the service we actually provide to people is a big deal. You know, we're like this specific lady who called up. She said, you know, Joe, she said, I really think you should do a show on this. And that's what prompted us to do the show today,
Yes.
because she said, I can't believe the things that I'm hearing. She said, you know, and she has the annuity 2 years now. And she said to me, you know, I just really, she says, I'm so pleasantly surprised because my husband's going to retire. I'm going to retire. And we need this money to live on. Mm-hmm. The only problem she's going to have, and I have this problem with other clients, they're going to have too much money. Now that sounds crazy, but if you do have too much income, then you do pay tax. So sometimes we gear it back. We may take, that's the benefit also of having more than one annuity. You may have one annuity you turn the income on, and one annuity you let it ride or put it off for a few years until you need that money. Or maybe you find a point where you say, you know what, I have enough income here. I want to give my daughter this money. I have people that do that with their family members. They'll actually take the income and every month they send money to their daughter or their son. Not a bad way to go.
So it's really tailored on what the client wants.
Of course. You know, I've been in many, many meetings with other brokers over the years, and I see how they operate, and they don't operate like me. I let the client talk. I want to hear what they have to say. I want to hear what their emotions are telling me. Because when they deal with other brokers and other advisors, simply what they do is those people tell them specifically what to do. I don't think they listen. You know, Judge Judy always says you have one mouth and two ears for a reason. And if you're talking too much and you're not listening, it's not good. And that's unfortunate what most advisors do. Have that same lady is 80 years of age. She told me, I didn't even ask her. I said, she says, my advisor's like in his 30s. You know, that's good or bad. It may be good for buying, you know, the latest stocks, but it may not be so good for figuring out income, you know, for a 30-year-old versus an 80-year-old. You know, I have to put myself in those people's shoes and figure out what size they need. Do they need a 7? Do they need an 8? Do they need a 10? And what that actually interprets to is, do they need income? Do they not need income? Do they want to transfer assets? You know, whatever that need may be, and we'll figure it out for you.
It's funny. I went to Austin, Texas a couple years ago, and you just reminded me of when I went to the cowboy store on Donald
to get
Indiantown.
your boots?
Yeah, and they have a whole system of measuring both of your feet, and he got the most perfect pair of cowboy boots for me. But, you know, I thought it was always a 9.5, but one foot's a 9, the other foot's a 9.5, a little bit more. So,
So why should the guy sell you a 12?
Right.
And that's what people do with this insurance stuff and investment stuff. They buy the wrong size. And if you can understand that, that's what we try not to do. We try definitely hard to do that, is to figure out what specifically fits your needs. And if we do that, we're doing our job right, you know?
And I think a lot of people, they have to remember that it's their money.
Yes. How many people do you deal with rollovers where the client will call, and we've had this recently with a few people, we're trying to transfer assets over and the company's giving us a hard time. You know why they give us a hard time? Because they don't want to release the money. They act like it's their money. In fact, I heard somebody talking about this. God, it was probably 2 or 3 months ago. They were talking about how these investment companies, mainly the stock brokerage companies, how when there's a run on the bank where everybody's pulling their money out because the market's low, which the market right now is very volatile. There's stocks that I have right now that I can't believe how much it's gone down. And you know what's funny? The general, talk about what does Trump say about the media, fake media? I'm going to tell you, there is financial fake media out there.
Fake news.
It's fake news. It's fake financial news. Let me tell you something. The market has been going down significantly, way past 10, 20, even 20, 30% down in some cases. Gold went down significantly. Silver went down, like it went up, and it went right down 30%, 40%. There are stocks that have gone down 30, 40%. And if you watch this fake financial news out there, they don't talk about it. They don't want to scare people. But let me tell you, you got to be very, very on your toes today with your money, whatever it is, you know?
Well, that's the thing. You can still be working while you're carving out some of your money that you might have in a 403B, 457, whatever plan it is. You can, a lot of the times, move some of that money over, right?
Yeah, exactly. You know, the reason I wrote this book, Retirement Know-It-All, and I want everybody to get a copy. It's funny. Dana is how old now? 28?
Yeah.
So 9-10 years ago when I actually started writing the book, and she said to me, Dad, how much are you going to charge for the book? And I said, $99.95. She says, you mean $9.95? I said, no, $99.95, almost $100. She goes, nobody's going to buy your book. She said, why that kind of money? I said, well, I think it's worth $100. I said, the information in here can change your financial life. How much would you pay for that? You know, people pay every day their financial advisors out there that do stocks, bonds, mutual funds, 401ks, 403bs. They're paying them 1.5% to 2% a year. Now, I say to people, do you think it's worth it? If you have a $300,000 brokerage account and you're paying somebody 2%, that's $6,000 a year for the rest of your life.
It's a lot of money.
10 years is $60,000. 20 years is $120,000. Was that guy, you talk about commission, was that guy really worth $120,000? He must have been doubling your account every 3 years or 2 years, for God's sake. It comes to a point where people have to know about their money. And now is a good time. If you're thinking about retired, you're already retired, or you're going to think about turning your pension on, you're going to think about turning income on, you need money per month to live. Think about talking with us. Compare apples to apples. Don't compare apples to oranges. And what that means is, you know, if you're dealing with a bank, they're going to sell things we don't sell. You deal with a brokerage, you know, a Morgan Stanley, a Merrill Lynch, whoever they are, Fidelity, they sell things we don't. An insurance company do things that they don't do. You just have to understand there's different things in this world, and you're not an expert in everything, and neither am I. By the way, I told you about my pool guy. He's coming over to redo my pool. This guy was a wealth of knowledge. I mean, I wouldn't go to anybody else just specifically because the guy knew everything there was about refinishing our pool. We're going to use him 100%, hands down. I already told him. And he told me, he said, this is interesting. He said to me, we're going to send you 8 different variations of tile. I've got 9 in mind, but I'm going to send you 8. I think the other one's not going to fit you. Tile, you know? And I said, okay. And it's the same thing with this business. You want to go to somebody that knows what they're talking about. And I said to the kid, I said, I know you know what you're talking about. He goes, oh yeah, this is what I've been doing. My mom started the business with my dad 40 years ago, and I've been doing it since I'm 16. And he's probably like 40 now. And he said, that's all I know about. And I said, it's funny. All I know about is annuities and retirement planning. He goes, I know nothing about that. And that's what you have to understand as an investment person, an investor. Do you really know? Do you want to fake this stuff? Don't fake it at this age. Don't go into an advisor and fake that you know about this stuff. Because generally speaking, you probably don't, right? But you need somebody to educate you. And by educating yourself, that's the point I started on. Get a copy of our book, Retirement Know-It-All. I give it away. I could charge you for this book. I don't. I send it to you. It costs me money. It costs me money to send it to you. I've always thought about how important education is. You guys, my kids all went to school, right? You got a 4-year degree. Evan got a 4-year degree. A 2-year degree. And Dana got a 4-year degree. And everybody, through life for you guys, it's important to finish things, right? And education is part of it. Now, I don't think you have to have a degree, but I think educating yourself on anything is very important.
Right. Like those trade schools.
Yeah, big time.
So make sure you get a copy of Jupiter Joe's book, The Retirement Know-It-All. You can get a free copy by going to jupiterjoe.com. If you're ready to talk to Jupiter Joe, give us a call now, 561-743-0999, and go to our website. Check us out.
One thing I want to mention, and where we started, let's go back to where we started. If you run out of money in your bank, if you run out of money in your brokerage account, if you run out of money in any account other than a fixed income annuity, you're going to have, and you have a zero balance, you run out of money completely. Well, with a fixed indexed annuity and it's an income rider on there, you're going to get, it sounds gobbledygook. All it means is that you're going to get income for life, even if this is zero balance.
Right.
It's a big deal. Give us a call. Let me show you what I know about this retirement stuff for free. If you don't like it, no problem. Worst case scenario is you get a free book and some free information.
So I found also in your book, you wrote, you need to know how long your money may or may not last. Running calculations to get estimates is vital when calculating future income from your retirement funds.
Yeah, I mean, the biggest problem, it's funny. I told you about that new magazine I just picked up. It was at Publix. It was the Retirement Guide. And I bought it. It was like $14.99, and it's all in there about, the first thing they talk about is don't run out of money. I mean, that's got to be rule number one. Make sure you know your expenses, your income and expenses, and how long your money's going to last. You will hear people say, I don't know how long my money's going to last. Well, with us, you may. You probably will know to the penny how long your money's going to last and what your money going to do.
And you don't have to haphazardly be withdrawing money because you need a little bit more this year, a little less.
The advice I hear that's given to some clients that are in their late 60s and early 70s and even 80s from some of the advisors out there is just scary, downright scary. I'm thankful for the opportunity that I have to do this show, and I'm thankful that I'm helping people. And I think people should just take advantage of it because it's a big deal. It really is.
Exactly. So today's show was Zero Balance, Still Get Paid.
Mm-hmm. And get a copy of our book, Retirement Know-It-All by Joe Thomas.
Go to jupiterjoe.com. Thanks so much for listening to the Jupiter Joe Money Show. We will see you here next time.
Yes, sir.